Let's bring in another market voice joining us now by phone. Lindsey, Chief Investment Strategist at Ally Invest and a CNBC contributor. Lindsey, great to hear from you as always. I guess starting off with the general market mood, it feels like it's super positive, another record close on the NASDAQ. But have we in fact been range-bound for a couple of weeks when you look more at the S&P 500? And will it take a lot to break us out of that range in either direction?
Yeah, I mean, we definitely have been range-bound for the last couple of weeks. Of course, you get a Monday like this where we're hitting new highs in the NASDAQ and some of the big tech names. Sure, that feels exciting, but underneath, I think the reality is coronavirus cases are increasing here in the U.S. While the economic data up till this point has been surprising to the upside, the question mark remains, how is that going to develop over the next couple months? Are we going to see a plateauing in economic data? There's still a lot of questions out there, even with policy. While policy has been a great support to the system for the majority of the last several months, this month in particular, several of the fiscal policies are going to run out. And by the way, taxes are due July 15th, so that could put a damper on sentiment too. So I think there's a lot of question marks out there, even if it feels a day like today feels really good. And as we get into the second half of the year, I do believe, like your guest was saying earlier, that fundamentals are going to matter a lot more when that policy jolt starts to fade.
Are we more likely, Lindsey, to break meaningfully higher or lower?
You know, to me, I think that as we go through third quarter earnings season, you know the summer is a slower, weaker period during the year. I think that we're going to get some digestion and some consolidation because I think it's going to be a huge mixed bag. I don't think any management teams are going to say anything earth-shattering, but I think the game changer is going to be the election in November, and that's going to determine where we go to the upside or downside from here.
Same quick question to each of the traders, one by one. More likely to break meaningfully higher or lower? Guy first.
Well, I mean, I have to be steadfast in my beliefs. I think the break is going to be meaningfully lower.
Tim?
How are we defining meaningfully, Wilf? Look, I think the liquidity of the Fed, which, by the way, the last 3 weeks we've taken Fed liquidity out of the market and the market's still gone higher. That's very good news for that correlation trade. I do think that there's more room to the upside, not meaningful, and I think the markets are at some point offsides.
Dan?
Yeah, I think you have a 1 up, 2 down scenario to answer your question. I think that maybe you see the S&P 500 back near 3393 under some of the best case scenarios, but on the downside, possibly down to 2750. That's how I get to 1 up, 2 down.
Lindsey, I'm generalizing those answers a little bit. 2 to 1, bear to bull there. Is that the same kind of answers you get when you speak to your clients?
Yeah, I mean, I think that that's where the institutional mindset is at, and I think on the retail mindset, which is where I'm at on the Ally Invest side, is much different. There is more enthusiasm and excitement within the market and the potential for it going into the end of the year, especially as, like you said, like people continue to work from home. They have time to dabble in the market and learn, and there's definitely a strong interest for that.
Hey, Lindsey, it's Tim. So with some of the sectors that have really underperformed, is there some interest in starting to rotate? Look, we had an ISM services number this morning, which was very bullish. Obviously, the payroll number's been digested, but PMIs around the world. I'm not saying we're off to the races here, but there are sectors that have badly underperformed. And so, you know, I think we're all saying chasing 5 or 6 stocks at the top of the NASDAQ leaderboard is concerning. But is there anything you can own?
Yeah, no, I think it's a great question. And, you know, I've been eyeing financials for the last couple months now because I agree with you. That's one sector that has been beaten down significantly. And the economy is starting to improve. And even if we do hit a little bit of a plateauing here, I do think that the worst is behind us. And these stocks have been beaten down to 2009 levels. So I think there's opportunity within that sector, even with interest rates remaining low for a long time.
That said, Lindsey, I wonder, you mentioned the election briefly in an earlier answer. Do you think the financials will be at risk if there's a Democratic sweep at the election? There was a note out earlier today from JP Morgan that actually suggested the broader markets were not too much at risk from the election, but perhaps financials would be a sector that could be.
I mean, it'll definitely be a focus if there's a Democratic president and Democratic sweep for sure. But again, I do think this is a sector that's been beaten down so significantly that once we get past the election, there is, there's the ability to for the uncertainty to be lifted because you know where you're going for the next 4 years. And while the red tape that has been cut by the Trump administration on the financial sector regulations that have been removed, that will likely, potentially come back on. I think that these stocks are just so beaten up that it's something that's worth at least having some exposure in your portfolio.